You have been lied to, not by a specific person, but by a system that was designed for a world that no longer exists. You feel it every time you go to the grocery store. You feel it when you look at house prices. You feel it when you look at your savings account and realize that even though the number's going up, your life isn't getting any easier. You are working harder than your parents did, yet you seem to be falling further behind. And I'm here to tell you that you aren't crazy. You aren't imagining it. The rules of money have changed, and the people who are still playing by the old rule book, go to school, get a safe job, save 10% in the bank, are walking into a financial buzzsaw in 2026. What we are experiencing right now isn't a standard recession. It's something far more dangerous because it's invisible to the headlines. It's a silent depression of purchasing power. The stock market is hitting record highs, politicians are celebrating GDP growth, but the average family in America and Britain is suffocating. Why? Because the currency itself is broken. The money you are working for is bleeding value faster than you can earn it. And unless you understand exactly what is happening to your wealth right now, and unless you take specific, somewhat radical steps to position yourself on the right side of this equation, you are going to work until the day you die. But there is a way out. It is not a get-rich-quick scheme. It is not a crypto coin that will go to the moon. It is a fundamental shift in how you operate your life. It is the difference between being a victim of the economy and being a master of it. I have spent 80 years studying what actually builds wealth, not what looks like wealth on Instagram, but what actually survives crises, inflation, and market collapses. Today, I am going to walk you through a complete protocol to escape the middle-class trap. This is a masterclass in financial survival for the next decade. I'm going to break down exactly why your savings are failing you, the specific assets you must own to survive the devaluation of the dollar and the pound, and the 7 steps you need to take starting today to secure your freedom. This is going to be detailed. It is going to be long. But I promise you, if you watch this until the end and actually implement what I share, you will look back on this moment as the turning point in your financial life. Let's begin with the hard truth that nobody wants to tell you. The money in your bank account is not money. It is currency. There is a massive difference. Money creates value. Currency is a claim on value that is being diluted every single day. Since 2020, we have seen an expansion of the money supply that is unprecedented in modern history. Governments printed trillions to keep the economy afloat. They told you it was temporary. They told you inflation was transitory. They were wrong. And now you are paying the price. When the government prints money, they are not creating wealth. They are stealing value from every existing dollar in circulation. It is an invisible tax. If you worked for $100 in 2019, that same effort today is worth significantly less in real terms. You are running on a treadmill where the speed keeps increasing, and you are exhausted. Most financial advisors will tell you to just save more. That is terrible advice in this environment. Saving a depreciating currency is like trying to carry water in a bucket with a hole in the bottom. You can run faster, you can work harder, but you are fighting mathematics, and mathematics always wins. The wealthy do not hold currency. They hold assets. This is the first and most critical distinction you must understand. In a period of high inflation and currency devaluation, the person who holds cash loses. The person who holds debt gets crushed. But the person who holds productive assets, businesses, real estate, farmland, intellectual property, they get richer. Why? Because as the currency becomes worth less, the price of the assets reprices higher to match the new reality. The stock market going up isn't always a sign that companies are doing 20% better. Often, it's just a sign that the dollar is worth 20% less. If you own the assets, you are protected. If you don't, you are the one paying for that protection. The gap between the haves and the have-nots is widening, but it's really a gap between the owners and the earners. The earners are being wiped out. The owners are pulling away. I want you to become an owner, and I'm going to show you exactly how to do it, even if you don't have millions to start with. This requires a complete reprogramming of your daily habits and your investment strategy. I have distilled this down into 7 steps. These are the steps that I have used, that my partners have used, and that the wealthiest families in history have used to preserve their fortunes through wars, depressions, and currency collapses. Step 1. The gap is your God. You cannot invest your way out of a bad spending problem. It is mathematically impossible. The foundation of all wealth is the gap between your income and your expenses. Most people view this gap as savings, something they do if there is money left over. No, the gap is your oxygen. It is your lifeline. In 2026, you need to widen this gap aggressively. I don't care how much you earn. If you spend everything you make, you are poor. You are just a poor person with a high standard of living, which is the most dangerous position to be in, because you have no resilience. You need to look at your life with ruthless objectivity. Where is your money going? The average person bleeds money through 1,000 tiny cuts. Subscriptions they don't use, cars they can't afford to impress people they don't know, food that creates health problems which cost more money later. You need to stop the bleeding. I still live in the same house I bought in 1958. I drive cars until they fall apart, not because I have to, but because I understand the opportunity cost of money. Every dollar you spend on a luxury today is a soldier you are killing before it can go out and capture territory for you. For the next 12 months, I want you to undertake a radical audit of your life. Cut your expenses by 20%. It sounds hard. It is hard. But do you know what is harder? Being 65 years old, too tired to work, and having nothing to show for 40 years of labor because you bought too many lattes and leased a BMW. Create the gap. That gap is the capital you will use to buy your freedom.
Step 2. Become a collector of businesses, not a speculator of stocks. Once you have capital, you must deploy it. But most people do this wrong. They treat the stock market like a casino. They look for the next big thing. They buy what is hot. They buy when they feel greedy and sell when they feel scared. This is a recipe for poverty. You must stop looking at ticker symbols and start looking at businesses. When you buy a share of a company, you are buying a piece of a living, breathing organization. You are buying the labor of its employees, the brilliance of its management, and the loyalty of its customers. In an inflationary environment, you want to own businesses that have pricing power. This is the secret sauce. Pricing power means a company can raise its prices to match inflation without losing customers. Think about Apple. If the price of an iPhone goes up $100, people still buy it. They might grumble, but they buy it. That is pricing power. Think about utilities. You have to pay for electricity. That is pricing power. Now think about a generic clothing brand. If they raise prices, you go somewhere else. They have no power. They get crushed by inflation. For the vast majority of people, the best way to own businesses is not to pick individual stocks. It is to own the entire market, a low-cost S&P 500 index fund or a total world stock market fund. You are buying a slice of the 500 best businesses in America. You don't have to read balance sheets. You don't have to watch the news. You just have to buy, consistently, forever. You are betting on human ingenuity. You are betting that companies will figure out how to make money, how to solve problems, and how to grow. That is a bet that is paid off for 200 years. Don't bet against it now. Step 3. The fortress of solitude. Cash is trash, but cash is king. This sounds contradictory, so listen closely. I just told you that cash is losing value, so why does Berkshire Hathaway hold over $160 billion in cash? Because cash is an option on the future. When the rest of the world panics, and they will panic, cash allows you to be the one person in the room who is calm. When the market crashes, stocks go on sale, real estate goes on sale, great businesses sell for pennies on the dollar, but you can only buy them if you have cash. Most people are fully invested at the top of the market. They have no dry powder.
So when the crash comes, they watch their portfolio drop 50% and they can do nothing. Or worse, they lose their job and are forced to sell their investments at the bottom to pay for groceries. That is the ultimate tragedy, selling a great asset at a low price because you have no liquidity. You need a fortress. You need 6 months of living expenses in a high-yield savings account or short-term government bonds. This money is not for investing. It is for sleeping at night. It is your insurance policy against life. Do not touch it. Do not invest it in crypto. It sits there, boring and safe, so that when the storm comes, you don't have to liquidate your future to survive the present. Step 4. The debt-death spiral. If you have credit card debt, you are a slave. There is no polite way to say it. You are working to make a bank rich. You are paying 20%, 25%, sometimes 30% interest. There is no investment in the world that guarantees you a 25% return. The S&P 500 gives you 10% on average. If you are investing while you have credit card debt, you are taking 1 step forward and 2 steps back. You must attack high-interest debt with a level of ferocity that scares you. Sell things, work extra hours, do whatever it takes to get that balance to zero. Debt is the chain that keeps you in the middle class. It forces you to stay in a job you hate. It makes you afraid to take risks. It robs you of your future cash flow. However, not all debt is bad. A 30-year fixed-rate mortgage on a rental property that pays for itself, that is good debt. In an inflationary environment, debt actually gets cheaper over time. You borrow dollars that are worth a lot today, and you pay them back 20 years later with dollars that are worth much less. That is how the rich use debt. They borrow to buy assets that rise in value, and they let inflation erode the value of the loan. But for you, right now, unless you're a sophisticated investor, your default setting should be avoid debt like the plague. Step 5. The only asset that cannot be taxed or stolen. We talk a lot about stocks and real estate, but the ultimate asset is you, your ability to earn money, your skills, your mind. In a depression, in a recession, in a hyperinflationary collapse, skills are the only currency that matters. If you are excellent at what you do, if you solve expensive problems for people, you will always be able to eat. You will always be able to generate wealth. Most people stop learning the day they leave school. They coast. They do the bare minimum to not get fired. This is dangerous. In 2026, with artificial intelligence and automation reshaping the economy, average is over. Being average is a fast track to obsolescence. You need to become exceptional. You need to become a learning machine. I read 5 to 6 hours a day. I have done this for 70 years. I am not smarter than you. I just have more facts. I have run more simulations in my head. I have studied more history. You need to invest in your brain. Learn a new skill this year. Learn about digital marketing. Learn about coding. Learn about sales. Learn about leadership. Increase your earning power. If you can increase your income by $10,000 a year through better skills, and you invest that $10,000 at 10% over 30 years, that's worth millions. The ROI on a book or a course is often higher than the ROI on a stock. Never forget that.
Step 6. The information diet. We live in an age of noise. Every day you are bombarded with headlines designed to trigger your fight or flight response. Market crash imminent, dollar collapse coming, civil war. This media is not there to inform you. It is there to sell ads, and it is making you a terrible investor. Hyperactive news consumption leads to hyperactive trading, and hyperactive trading leads to underperformance. The more you look at your portfolio, the more likely you are to do something stupid. You will sell when you should hold. You will buy when you should wait. You need to disconnect. Stop watching the financial news all day. Stop checking your brokerage account every hour. The best investors are the ones who make a plan and then go live their lives. They check their accounts once a quarter, maybe once a year. They understand that wealth is built in decades, not days. The daily fluctuations are just noise. The trend is the signal. Ignore the noise. Focus on the signal. Step 7. Automate the discipline. This is the final step, and it is the glue that holds everything together. Human beings are weak. We are emotional. We have good intentions, but we lack follow-through.
You might watch this video and feel motivated. You might say, yes, Warren, I'm going to save 20% of my income. And you might do it for a month, but then your car breaks down, or you want to go on vacation, or you just forget. You cannot rely on willpower. Willpower is a muscle that gets tired. You must rely on systems. You need to automate your financial life so that you don't have to make decisions. Set up automatic transfers. The day your paycheck hits, the money should instantly move. 10% to your 401k, 10% to your brokerage account, 5% to your emergency fund. The money should be gone before you even have a chance to touch it. When you automate, you remove the emotion, you remove the temptation. You are paying your future self first, automatically. You learn to live on what is left, and amazingly, you will find that you can live on less than you think, but you will never know that if the money is sitting in your checking account staring at you. Make the decision once, and let the machine execute it forever. Conclusion. The year 2026 is approaching, and with it comes a set of challenges that will test the financial resilience of every household. The era of easy money is over. The era of low inflation might be over for a long time. The silent depression of purchasing power is real, and it is eroding the dreams of millions of hardworking people. But it does not have to be your story. You have a choice. You can continue to play by the old rules, saving cash, avoiding risk, hoping the government will save you. Or you can take control. You can accept that nobody is coming to save you. Not the Fed, not the president, not your boss. It is on you. By widening the gap between your income and expenses, by becoming an owner of productive assets, by maintaining a fortress of cash, by destroying bad debt, by investing in your own skills, by ignoring the noise, and by automating your discipline, you are building an ark. While others are drowning in the rising tide of costs, you will float. You will not just survive, you will thrive. Wealth is not about private jets and champagne. It is about freedom. It is about waking up in the morning and saying, I own my time. It is about looking at your family and knowing they are secure no matter what happens to the economy. That is the prize, and it is worth every ounce of discipline it takes to get there. The path is simple, but it is not easy. It requires you to be different. It requires you to say no when everyone else is saying yes. It requires patience when everyone else wants instant gratification. But I can tell you, from the vantage point of my 90-plus years, the view from the other side is worth it. Don't just watch this video and nod your head. Do something. Pick one of these steps and start today. Open the account, cancel the subscription, buy the book, make the transfer. Your future self is watching you right now, begging you to make the right choice. Do not let them down. Subscribe to this channel. We are going to continue this conversation. We are going to go deeper into how to value businesses, how to understand macroeconomics, and how to build a psychology of wealth that is bulletproof. The storm is coming, but we will be ready. Stay rational, stay patient, and keep compounding.